All right, let's talk about something we all love to think about, tax season. We're going to break down all the important ITR deadlines for the 2026-27 assessment year. And you want to stick around because there are some brand new rules this year that might actually make your life a little bit easier. For real. Let's dive in.
You know that feeling, right? That little knot in your stomach when the filing deadline starts getting closer and closer? Yeah, we've all been there. It's kind of the universal experience of being a taxpayer.
But here's the thing. This year, things are looking a bit different. The government has actually rolled out a few key changes to, in their words, provide ease of living for all of us. So let's see what that actually means for your calendar.
Okay, first things first. The most important thing you need to do is figure out which deadline actually applies to you. It's not a one-size-fits-all situation, you know? Your specific date really depends on what kind of taxpayer you are.
And the biggest dividing line here, the thing that really separates the deadlines, is this. Do your accounts need a professional tax audit or not? Basically, if you're a salaried person, your date is going to be way different than a big company that has to get its books checked over by an auditor.
So, let's kick things off with the one most people know, July 31st. This is the classic, the go-to deadline for the vast majority of us individual taxpayers. We're talking salaried employees, pensioners, pretty much anyone whose accounts don't need that formal audit.
Now pay attention, because this is the first huge change for this assessment year. There's a new deadline on the block, August 31st. This is specifically for you if you have business or professional income, but your accounts are not required to be audited. So if you're a freelancer, a consultant, or a small business owner, listen up. You just got an extra month. That is a massive help for getting all your paperwork together without that last-minute scramble.
Next on the calendar, October 31st. This is the big one for all companies. And it also applies to any other taxpayer, whether that's an individual or a firm, whose accounts do need to be audited. So if you need an audit, this is your date.
And finally, we have November 30th. This date is for a pretty specific group, taxpayers who are involved in certain international or specified domestic transactions and have to file a special report on them.
Okay, I know that was a lot of dates to throw at you. So let's just put it all in one simple table to make it super clear. So, to recap, if you're salaried, you're looking at July 31st. Got that non-audit business income? Great, you've got that new extension to August 31st. For companies and anyone else who needs an audit, it's October 31st. And for those dealing with those special transactions, your final date is November 30th.
All right, so what happens if you miss your deadline? Or what if you file on time and then realize you made a mistake? Well, the first thing is don't panic. You've got options. And guess what? Those options have gotten better this year too.
If you miss your original due date, whether it's July 31st or August 31st, you can file what's called a belated return. Think of it as your second chance to get your taxes filed. But it's not a total get-out-of-jail-free card. It does come with a few strings attached, which we'll get to in just a sec.
Now, this is a date you absolutely need to remember. The final, hard stop, no more chances deadline to file that belated return for the 2026-27 assessment year is December 31st, 2026. After that day, the window to file for that year slams shut.
Okay, but what if you filed on time, patted yourself on the back, and then, whoops, you spot an error? That's what a revised return is for. It lets you go back in and fix any mistake, whether it was in your original return or even in a belated one you filed later.
And this brings us to the second piece of really good news. Before, you only had 9 months from the end of the financial year to revise a return. Well, that timeline has now been extended to a full 12 months.
So what does that actually mean for you? It means you have a much bigger, much more relaxed window to make corrections. You now have all the way until March 31st, 2027 to revise your return. This is a huge relief, honestly. It takes off so much pressure, especially for folks who might file a belated return right at the end of December. Now they get an extra 3 months to double-check everything and make it right.
Of course, while these second chances are great, filing late isn't exactly free. There are definitely costs. Let's quickly run through the penalties you could be looking at if you miss that first deadline. So the standard late filing fee, under Section 234F, is a flat 5,000 rupees. Simple as that. If you file after your due date, that's the penalty. But there is a bit of relief for smaller taxpayers. If your total income is 5 lakh rupees or less, that late fee gets knocked down to just 1,000 rupees. But listen, that fee isn't the only thing to think about. If you owe tax, you're also going to get hit with interest charges at 1% per month.
And here's a big one. You lose the ability to carry forward most of your business losses to set off against future income. That can really hurt. And of course, any refund you're waiting for, yeah, that's going to be delayed.
So you might be wondering, why all these changes all of a sudden? It's always good to understand the why behind these new rules.
Well, the official reasoning is pretty clear. The government says the whole point is to provide ease of living, streamline the dates, and just generally reduce the headaches for taxpayers. These changes, like that extra month for businesses and the longer revision window, are all meant to make the whole tax filing process a little bit simpler and a whole lot less stressful.
So there you have it. With these new dates and longer timelines, you've got more power to plan ahead and stay on top of things. The real question is, how are you going to use this extra time and flexibility to make this next tax season your smoothest one ever?